because we're seeing since the beginning of the year, markets have gone up dramatically. Well, guess what that's led by? Very much by stock buybacks from corporations. And what I really want you to understand, well, let's take a look at this. January authorizations, this is from 2005 to the present, and look at where we are, and we're just at the beginning of 2023. These announced buybacks more than tripled from a year ago. But what I really want you to understand about this is that once that money boosts the stock and they spend it, it doesn't go back in the corporation if they need help. We'll talk a little bit more about that in just a second, because this is really where we are. Corporate America continues to splurge on its own shares, a force that has fueled the New Year rally. And by the way, these valuations are the highest ever, 27 times forward earnings. And can you please tell me what those forward earnings are going to be in this particular environment? So they are buying their shares when they are the most richly valued in history. That certainly makes sense to me. I hope you realize I'm being completely facetious. At a time when recession risks are mounting amid Federal Reserve tightening, the buying spree may be viewed as a ruthless deployment of cash. And like I said, once they spend that money, it's no longer in the corporations. So just like we saw with Boeing a few years ago, and Boeing is very big on share buybacks and dividends and all of that, taxpayers had to bail them out. Are we going to be forced to bail them out again? And will there be winners and losers in this? There will definitely be winners and losers, even amongst the corporations. Bank of America warns investors risk sleepwalking into a sell-off. This is going to be much bigger than a sell-off. This is a game of chicken. And my question really is, will the Federal Reserve, in their desire to prove that they still have control of these markets, will they force an even bigger recession than they would have had otherwise? Because what are we hearing about? We're hearing about this Goldilocks soft landing and a soft recession. This isn't going to be soft. There's no way. There's too many things that are going on, and they have to shift this. And the only tool that they have is money printing. They've raised the interest rates, and that's pushing us into a depression. And there's only one way to fight that, and that's with inflation. But just like this will be a hyperdeflation, I believe really strongly that this will be a hyperinflation. It's the only way to fight it. I mean, therefore, it makes it easy. But what you really need to understand is that there is a risk on, right? So corporations make their stocks look like they're going up, and then people have this fear of missing out, especially in the face of the inflation. Global equity funds had 44.7 billion of inflows in the past 4 weeks. This is risk on. Stocks have rallied since the start of 2023 on signs of cooling inflation. It's a little bit of headline inflation. It's not going to last. Optimism over China's reopening and hopes that slower economies will, this is the real reason, people, force global central banks to pause hiking rates, and dare I say it, they're even betting on them lowering them. If you like this clip and you want to watch the full video, just click right here. And to subscribe, click right here.